Hey traders, hope you all having an awesome weekend and hope you all enjoying a weekend as well. A weekend's video here, and this weekend's video is going to be really important. It's going to be really interesting and really entertaining as well, because I'm going to talk about some interesting facts out there. Like, I'm going to talk about a course I bought from a really famous personality and what was my experience, and I'm going to talk about how I took a trade at the NFP, which just happened on Friday, the crazy movements out there, and how we took a trade exactly at NFP release. And then I'm going to show you the entries we had this week. Like I mentioned from last 2 to 3 weeks that it's been a while since the price hit our zones, and we are still waiting from a couple of weeks to hit our levels from where we're going to enter our counter trades, or if we are in between the levels, we're going to enter our buy or sell trades. But this week, both commodities and Forex hit our zones after a slow market from last 2 to 3 weeks. Finally, we had some big movements, and how we entered the trade from those zones with the exact same rules I try to teach you in the YouTube video. So trust me, if you want to give it 20 to 30 minutes out of your time to this video, I promise you, you're going to learn something out of it. If you want to learn trading, if you want to take trading seriously and make it your career, then trust me, you're going to get tons of knowledge and you're going to get lots of information from this video and what to expect from the Forex market, or what to expect from the commodities, Forex, stocks, whatever you trade, and how we take our entries and become profitable. And in the second part, we're going to do analysis as usual for net gas, gold, silver, crude oil. I'm going to add US cocoa as well. I'm going to show you the winning trade, losing trades, what happened if the zones is broken, we entered the trade, it did not play out, and how we change our directions. So that is what I'm going to talk about, everything in the first part of the video, so that you can learn something in your weekend's video. So guys, get ready, get your drinks out, Coke or pizza, as it's going to be really long video. But I assure you, you're going to enjoy that as well. So starting with NFP trade we took with my MMTA course student. Now this was not an alert sent to the members, but an alert sent to my students because they are aware with the exact rules of entries. Now I'm going to show you all the other trades as well, winning and losing. Now before I continue, the first thing in your trading you need to master if you want to become successful and profitable trader, there is no way you can't make money. And at the end of the year, I'm going to show you my results as well. And so far, you have seen the results in my last weekend's video. We are up more than 75% in our equity. Now, if you just follow these 4 factors, then no one can stop you to become profitable. And of course, with that, risk management and trading psychology is very important. But these 4 factors, which is I always talk about in my videos, is observation, conditions, targets, and entries. These are the 4 factors I always look for whenever I want to enter in a financial market. And what is the observation? Observation is looking at the market. It's not like you just try to enter the trade with the FOMO. And if there is a news event out there, right at the news release, you just enter the trade. And with the spread, that's gonna hit your stop loss, trust me. Because the brokers, sometimes they open the spread and you can't enter the trade at exact time. Depends on the pair as well. So that was my observation. Here the trade we took at NFP. The condition was what? A double bottom, right? Condition is met, and one more condition, that if the price form a double bottom in my area, within my area of value, which is very important, it can form a double bottom right here, but I'm not going to enter the trade. But after a couple of weeks, waiting a couple of weeks, it did come to my level that we've been waiting from a couple of weeks. Now I'm going to show you right here. As you can see, the 3rd of June, I've sent this report to my members, and right here, this was the zone I've been sending to the members from a couple of weeks. As you can see, same as last report, which was sent to the members last week as well. Now, at this point, we've been waiting for the price to hit our zone. Until it won't hit the zone, we are not going to enter our buy trade. But yes, if the price forms a bearish condition, which is right here, yes, we're going to enter our sell trade, but in the way down, and then you can manage it wherever you want to manage. It's totally up to you how you might do your risk management. Then right here, once the price hit my area of value and no condition, so we are not going to enter the trade. Okay, there is no condition. Let's wait. If the price forms a double bottom, or if it breaks below, then we're going to go sell, or we're going to enter sell trade. These are my conditions I'm now closely looking at. If there is no double bottom, if price break above 50 EMA, let's start to look for the pullback entries. But yes, be patient. once the price forms a condition, we are going to enter our trade. But what do we have? We have a valid double bottom pattern right here. Now, it was a very aggressive double bottom, but here we also had a condition in case you've entered right here. Let me show you when I sent this to my students right here. So here's my Discord channel just for my MMTA course student. Now, it is not something that is alien for you. This is something I talk about in my almost every single video, and if you are my priority member, you also seen these type of entries in your priority group. But here in my Discord group, when we have some entries, that is according to the strategy they are learning there, because it will only make sense to you if you've learned your full course. So here we had a strategy which we are learning, and here we have an entry according to the strategy, the way we enter this type of entries. I sent this in the group that we have a good example of aggressive double bottom, and that happens at the area of value, and we also have an RSI divergence, which is also an extra confluence, and we have other factor which the students are learning there. So this was sent to my members. As you can see, the time 3:42 a.m. I know that's late, but that is my job. I always look at the market. I have my alerts set in my charts, and plus it's a weekend. I mostly work on the weekend and prepare myself for a next week and draw my zones, do my charts and everything. So here we had a condition that was mentioned to my members. And one more thing, very important. Let me show you how I entered this trade right here. So I took this trade on IC market. Now I take this trade in my live account. As you can see, the IC market is connected, and I've also shown my live running trades in the live sessions. Everything I do is live, but I do my risk management very, very carefully. Now at this point right here, as you can see, I've set up 1.4 to 1 risk to reward ratio targets. Now I did not enter right at this candle because I don't want to confuse you guys. To my student, this is absolutely fine if you have just entered at the close or at the 382 candle. That is absolutely fine. But once you are profitable, once you know the rules and everything, then you can tweak your entries, which is what? This is something that is not alien for you, and this is something you have already learned in the course, which is a buy stop order. Because it was NFT, the price was somewhere here, and as you can see, my order was not at the close. I have set my order, which is my buy stop order, right here, 5 to 6 pips above. 6 pips above was my order set because of the NFP. Now it would be more likely chance that with the NFP the price hit my order and hit my stop loss with a spread, because I trade with IC market. They are really good with the spread. That is why I just kept 5 to 6 pips above. Now in that case, let's say the NFP have gone to the opposite side, right? If it is against the news, then it would save me to hit my stop loss. It would just move immediately down, right? Without hitting my entry point. So that is what was an extra filter I've added. Enter with the buy stop order, and with this NFP news, it hit my order, it triggered my order, and also hitting my target with just one single candle. And I knew that it was NFP, and that is why I've reduced my risk as well. Instead of going 2%, I have taken 1% of risk, because if that was against me, let's say if it hit my order and that pushes lower, in that case, at least I will not blow up my account, or at least I'm not going to lose 2% of my trade. I'm going to lose 1% because it was a high impact news. So that is how I took this trade with the NFP, with an extra filter, with a valid condition that happened at my area of value. We had a nice divergence as mentioned in the RSI, and one more condition as well, which my students are learning, and everything was going with my analysis. Double bottom, 382 candle. If you have entered here, that's totally fine. And here I've entered the buy stop order. It nicely hit 1.4 to 1 target, and patience paid off. A high impact news that comes every 3 months. That is why I've added an extra filter, and you can also do that if you want to, but sometimes you also miss out in the trades if you enter with the buy stop or limit orders. So a winning trade, a good example of enter technically before the news has happened. And when the news has happened, it really fueled our take profit. Now let's look at natural gas. I know that's your favorite commodity. Now at this point, most of the guys out there say that's a dangerous commodity to trade, and that is something very difficult to understand, but I have personally uploaded more than 600 videos. That is why I can say now that I understand the price action of this commodity very, very well. Now right here, the price was pushing up. We had 1, 2, 3 levels. Now step by step, I'm going to show you how we entered the trade. Now this was a zone report sent to my members on 19th of May. Right here, let me pull up the correct chart which was sent later on. Right here, as you can see, now this was the zone right here. That time it was a red zone. I've just changed the color, but as you can see the price here on the zones, we were prepared once the price was broken above this level. As you can see, this yellow level, I've already mentioned to my members that natural gas is pushing up in a strong momentum, and we do have a structure above in red, which is right here. That time it was in a red color. And as you can see, the price 2.940, that goes up to 3.130. And as you can see, 2.940, 3.130, exactly the same zone I've sent to the members. Now at this point, we were waiting for the price to push up and come into the red zone, and that will be an area from where we're going to look for a possible trades on a smaller time frame with entry condition. Right, so first step is that once the price broke above, we're going to enter our sell trade from here, right? And if you go back on smaller time frame, exactly how we predicted, right here, what do we have? A bearish candle right here, an engulfing candle, as you can see right here. So according to that, we had an entry, and how nicely the price pushed lower. Now, when the price was pushing lower, we had an eyes here on this level that was recently broken. And at that time when I was making videos, I got lots of messages. Omar, look at the weekly candles, right? Okay, come back, weekly candles. We had a pin bar right here. That is what we call a noise of the market. Yes, I was looking at, but we also have a zone below from where we can have a possible push up and where I was prepared to enter my buy trades. That weekly candle doesn't mean that we're going to reverse from here. We have a condition for reversal which was not met. But avoiding all the noise, I was just looking at this level, and which we were prepared, and which we were prepared here on my YouTube channel as well, not just with my students or members. So right here on my next report, which was sent on 26th of May, and that was also mentioned in my YouTube videos, as now we have a nice pullback from this zone which we've been waiting for our entries. We had an entry condition. Yes, we have taken the trade. That's totally up to you if you want to manage from here to here, or if you want to exit using 1 to 2 ATR targets. It's totally up to you how you are comfortable with the risk. So at this point, we had our trade from here. Now our eyes are on this yellow zone right here to take our next trade. Now here I've mentioned that we already have a nice push down from the anchor level last week. This week we are looking at the TCZ zone, which means a trend continuation bullish area, which have been marked in yellow, which is right here, from where we can get a possible bounce out of if we get a bullish engulfer inside of this yellow zone, or if we get a good entry condition above 50 EMA, we're going to enter our trade right here. Here on capital.com, I've mentioned these zones on all three, Oanda, Nemix and capital.com. Right here 2.498, this was a zone. Right here, as you can see in black, 2.498. This was a zone now we've been waiting for the price to come into and form some sort of condition, right? And what do we have? Once the price inside the zone, right, a minor level, price forms a swing low bullish engulfing pattern. That was sent to the members on 26th of May. So we have a nice push up. So step by step, right, we took a trade here, a sell trade here, and a buy trade here. Now, if you're really paying attention to my videos or my reports, if you are my members, then why can't you make money? Sell here, buy here. It's totally up to you if you want to manage from here to here, or if you want to manage from here to here, from zones to zone. That is how we trade, from zones to zones. It's totally up to you. In that case, stop loss above, take profit here. In this place, stop loss here, take profit here. So that is how you take your trades if you want to manage it. And my weekly videos, I can't explain every single thing in 5 to 6 minutes video, but this is something you need to figure out, or you can also message me how you can set your stops and targets. Now after that, we had a nice bounce from here, but we have a stall, or we have a stop at this level, right? So this week means last week on 1st of June, I've sent this report to the members that we already have some nice 1 ATR bounce from here, which we already had. We start to see a bounce, but I've said that price currently inside of trend continuation bullish area that was mentioned last week, and we have 1 ATR bounce from here. However, I'm still looking for the possible valid double bottoms from the same area, right? So we are still having this area in case the price come back down, and that was also mentioned in my video, and price form a double bottom. But instead, what we had a head and shoulder pattern that was mentioned clearly in my last 3 videos. That happens in my termination zone, and then that pushed the price higher. That is how we took the trade step by step. Entry from the resistance, entry from the support, next entry from the head and shoulder pattern right here that was mentioned, and then price right up level above in yellow. So follow your rules and take your trades like a pro, not like a gambler. Now this week I've also sent silver in the report. I've added the report of silver, which is right here. The price has broken above the structure level. That has been tested multiple times, and that's a valid trend continuation bullish area. That is why if you see a pullback, we're going to enter our long trades with conditions. And you see after the pullback how nicely the price blasted up from here, hitting a big targets. Now, if you have not taken your profits here, then why are you trading? In trading, it is very important to pull the money out of the market. And silver is one of the dangerous commodity to trade, right? So that is why take your profits, go 1.421, 1.621, totally up to you, manage your trades, and then NFP push this price lower, right? There was a news scandals, so many news scandals, but we managed to grab the money out of the market, and then we were looking for the buy condition, which we did not get. No conditions, no entries. That is what we're going to talk about in the analysis part, what to expect from here. But you see how nicely the price played out from the zones. We had a double bottom right here on 1 hour time frame. That is how we entered and nicely pushed the price higher. Then we have this coffee right here. This was mentioned in my live session that this is the zone from where we can expect some nice push down. There was a members only live session from Standard Plus members, and this is what we discussed there, some opportunities. And then what we have, GBP CAD, right? A forex pair. We've been waiting for the price to come in the green zone right here. This was a report sent to the members on 27th of May, a week before. And what we were waiting for? We were waiting for the price to come to our zone, which is right here, the green zone, and form some sort of condition. That was also discussed in the live session as well. As you can see, we talked about this pair, and when I've entered this pair, when I was already in the trade, I've shown that in the live session that it is still running. And as you can see, how nicely the price forms a double bottom pattern, right? And that fuels the price up. That is how we take our trades, conditions, observations, which is the price now in the zone condition. We have a double bottom, we have a divergence. Targets, yes, set of targets. We have an entry right here, which is a bullish engulfer. Targets 1.421, right? That is how we took this trade on 1 hour time frame. No guesses, no gambling. Then we have copper right here. We are waiting for the price to come into our zone. This was also mentioned in my live session with the students, right? And what do we have? The price hit my zone, right? Forms a pin bar right here. As you can see, my entry was a little bit above, not right at the close. That is how I take my trades, using one of my strategy which my students are learning in the course. And talking about the course, I'm going to talk something interesting about that in a very short while. So right here, I've entered few pips above. That nicely hit my targets. You see nicely hitting 1.421. Initially, I want to go 1 to 1 only, and then 1.421 has been hit. And then I was looking for a possible head and shoulder pattern to put for the price to push up. But NFP happens, and that pushed the price lower, of course. So no conditions, no trade, but we managed to grab the money right here. Platinum. Right here, sent to my members as well. Right here, we were waiting for the price to hit this level right here. And once the price hit this level, we're going to enter our trades. What do we have? Price hit my level, right? Bullish engulfer that nicely hit 1 ATR for the targets. If you want to go to 1.421 right here, move your stop loss to break even. In that case, you'll be out in break even. But if you're someone comfortable with 1 to 1, that is what I recommend for the beginners. That would have taken your profit as well. And then NFP happens, price pushed lower, broke below the zone. And then we had wheat, we had coffee, we had copper, cocoa, all the other soft and hard commodities that I've sent to my members, and we take our trades accordingly when the price hit our zones. This is some zones I've shown that has played out nicely. Now we still have the zones we are paying attention for: aluminium, for sugar, wheat, and the other commodities, which I'm going to mention in my upcoming videos. Right here, NZD USD, how nicely the price pushed lower from the zone. I've not taken this trade, but if you are someone right here, I've entered with on 1 hour time frame, a bearish engulfer, aggressive entry has happened, and how nicely the price pushed lower, falls from the zone we've been waiting for the last couple of weeks, and how nicely it pushed lower. Doesn't matter if NFP pushed the price lower. Technically, we were bearish, and NFP also fueled our profits. And if the price would have gone up because of the NFP, I'm not going to blame that NFP hit my stop loss. We entered before the NFP happens. Right? So I'm going to take a credit to my technical factors. Yes, when we have big news events, reduce your risk, but don't stop yourself to enter your trade once you see a valid conditions. Now I'm going to show you a losing trade first. I want to hit you with the reality as well right here. This was a zone that was sent to my members to take a buy trade. Now I've entered very aggressively. If you're my student, you know what entry we took here, but looking at a nice oversold situation, a nice hit of my zone right here, price from a bullish candle right here. So everything is going nicely with my analysis, right? Then why not enter this trade? So I've entered this trade following all my rules, but that just hit my stop loss. That was the first trade I've sent as an alert on Monday last week. But did that demotivate me? Of course not. I was like, That's totally fine. Now let's look at the next one. I was under my risk capital. I was not over trading. There was stop loss hit, part of the process, part of the business. Move on. So once my zone was broken, I was not interested to take buy trades anymore. When my zone was broken, I was only interested to take my sell trade. Either that happens at my area of value to take my sell trade, or that happens as a pullback entry below 50 EMA, which is right here. As you can see, we entered this trade in the priority group. We had a price broken below the zone. Now, as before last week, we were waiting for the price to bounce up from the zone, but now the zone did not play out. What we're going to do? We're going to change the directions. Enter the sell trade. And as you can see, the trade alert was sent to the members. We entered. But if you would have lost everything here, you won't be able to take the next trade. At that time, I didn't know. I have no idea that if this trade is going to happen. But the patience was the only thing. The mental psychology was the only thing that made me to wait, not doing revenge trading, not getting angry, but wait for a couple of days, and then this entry happens, right? It was a winning trade. Part of the process. Move on. Again, observation, conditions, entries, and targets. See, everything is going smoothly. Now, I want to show you something really interesting here. This was a pair I was waiting for the price to hit my zone above, right here, to take my sell trade. And right here, this was sent to my members last week on 3rd of June. It did not hit the level. Instead, it gave me a pullback without hitting my zone, right? As you can see, the trade alert that was sent to my members, instead of taking sell trade because we did not hit my zone right here, we just got a pullback followed by bullish candle in a trending market. Why not taking this trade? We have a nice trade here. We have a nice trade here that was sent to my members as well a week before. And instead of going short, we still enter long because we are still not in the zone. Why? We are getting scared of entering this trade and nicely hitting 43 pips of profits. Initially, it was 35. I've just managed it till this recent highs, and I knew that the price is going to fall from this area. That is why I just want to keep my take profit a little bit below, equal to the previous high. Nicely hitting the take profit. Right here, NZDCHF, this was trade alert sent to my members as well, and it is not one of my favorite pair, but it was trending nicely before. We were entering buy trades only, but once the price broke below the uptrend. Now, how we identify the uptrend? So this is something you need to learn as well. When the price is making higher highs, break above the previous high and keep on making higher highs, not without breaking below the previous low. In that case, we are just interested in taking long trades. Price just use the previous level, forms the condition, push up, use the previous level, form the condition, and ride along with the trend. Now, what is the signal that price is not going to push even more higher from here? When the price started to give a pullback, right, this was an area I was interested to take my buy trade, but not blindly. Once the price broke below this low, I knew that it's going to be a start of a new trend that is going to be a downtrend. And then when the price broke below, forms a bearish engulfer below this low, I was comfortable entering this trade. Right here, as you can see, we entered this trade and that hit our take profit as well that was sent to my members. So that is how we need to be trading in the market. You see how nicely, step by step, we took the trades with the condition. If we are in an uptrend, we buy. If we are in a downtrend, price broke below, we sell. And when the price in an uptrend hit the counter trades, we sell. And the price hit the trend continuation zone, we buy. Counter trade, look for the double top, and in that process, look for the pullback entries in between the zones. So very simple, very easy. We don't need to mark so many lines on the chart and look at every single line as a resistance or support. Keep it very simple, keep it very clear and neat, and then you can able to make money in the market. So before I end the first part of the video, I want to talk about the courses. Now, I do offer a course where you learn every single thing in order to become successful and profitable trader. Now, like I mentioned at the start of the video, that I want to tell you before I launched this course last year, more than a year, I also did my own research. When I learned this strategy, right, I want to teach my students how to enter your trades, how to exit your trades, how to draw these zones, how to take your trades when the price is in between the zones, how to use the indicators, what is a valid pullback, what is an invalid pullback, exact rules of stops and target according to the pullback entries, exact rules of stops and targets according to the aggressive entries, exact rules of stops and target according to double tops and double bottoms, head and shoulder. It's not something, not like leaving you guys on your own, where to set to stop loss, where to set to take profit. I gave you the exact numbers of stop loss, exact points, exact pips, 40 pips, 30 pips, 35 pips in my course. But funny thing I want to tell you, I bought one course a couple of years ago, and that guy, I don't want to name him, but that guy is a really successful guy. very successful and he's a multimillionaire. And I was like, I want to see what he is teaching to his students, because there was a course there which is a stock market course, a crypto course as well, and I bought it. It was very cheap, not very expensive. It was like £50, $50 only. And I swear on my God that in that course, the guy who is teaching you, he don't even tell you, and he claims to be a millionaire. He might be a millionaire, but if you have guessed it, buy that course, you will understand yourself. If you are my student in MMTA, you have seen my course, how I teach you. But if you want to buy that, look at that. And I follow him as well because I like him. But his course don't even show you how to set your stop loss. He don't even show you how to set your take profit. The thing is that, do your risk management. Learn it on your own. That is something you need to figure out. This is not how you teach your students. And he tried to teach one strategy there, which is no strategy. He set up the indicator, right? That indicator, he go in the indicator section. He placed that indicator on your charts, on the charts. And then you know what he said? Set the settings according to your own preferences. What the hell is that? When I designed my course, I show you how to plot the indicator. I show you what the correct settings you need to have and how you change the settings if certain conditions change. That is how my course is designed. And I was glad that I'm not teaching my students like that. I don't talk about my courses much in my videos, but I want to mention this in case you are really serious about learning, in case you are just struggling to find a good course. And I'm even ready to give a risk-free offer, which is a full refund if you don't like my course, which is not applicable at this point, which I'm going to launch in a couple of weeks. But here, if you really want to learn, we have this premium plan, which is not expensive. Trust me, once you learn it, you will see the worth of this course, where you will learn everything from the basics to the intermediate, advanced, everything. And the new strategies, of course, I keep on updating the strategies, which you're going to get for the lifetime. With that, you're going to get a standard plan for the lifetime and standard plus plan for the lifetime. So just once, and here you will learn everything. You have my full support, you have my mentorship, and then you also get access to my Discord group where we discuss the entries, conditions, where we learn with the other students, where you get a chance to speak to the students. If you have any confusions, we can all discuss that, if it's a valid or not valid trades, or what you're thinking. You can send your analysis in the group where you can discuss and take the trades together. So that is what you're going to learn, every single thing in a course. In case you are interested, this is the plan. You just need to invest on yourself one time. And then after your practice, after your back testing, you'll be ready to hit the market. And in my course, I don't say that do your risk management according to your own preference. I teach you how to do risk management. I teach you how to manage your trades. I teach you how to set the stops and targets. I teach you how to set indicators. Every single thing which a beginner needs to know, you will learn from point A to point Z. So let's wrap this first part of the video. And now let's jump on to the analysis part, which is net gas, gold, silver, crude oil, and US cocoa. Now I've updated my natural gas NEMIX charts already. As you guys knows, at the start I was just trading on capital.com and Ovanda, where I personally trade. It is my broker where I trade natural gas. That is why I was not really paying attention to NEMIX charts, because of the increased demands I got from the traders that they want to do analysis on NEMIX. There might be an old contract I was not aware of, but someone commented in my video that it is a wrong and that is an old chart and I need to be looking at June contract. So now I have a June contract. Apologies for that, but we had conditions happen on this chart and price did push up from this chart as well, in case you are wondering. But here right now we have a NEMIX future, and according to that we had a nice conditions, which is a head and shoulder pattern that was mentioned in my last video. So this is a NEMIX futures of June contract, which we are looking at this point, which I'm going to talk about and do analysis here on this chart. From now on, it should be automatically switched, but I don't know what happens. But here we have a correct charts of NEMIX. Now at this point, let's look at capital.com first. Price pushed up nicely from the head and shoulder pattern. Now, if you remember, I've told you that we have an entry right here, stop loss below, take profit till here. And then I've also said that if you are taking a less aggressive entry, that is your entry here, stop loss below, and go 1-to-1 initially. So both type of entries and targets and profits has been hit. I've also said that if you have entered here, if you want to manage till here, that is also totally up to you. That is also hit 1.621. Head and shoulder pattern has been completed, and it is a valid head and shoulder pattern inverse. Head and shoulder pattern, which is a bullish pattern. Now there are two ways we can enter the head and shoulder pattern. Number one is aggressive entry, which is right from here. Number two, less aggressive entry, which is right at the break of this termination box. If you enter here, you keep a stop loss below. That is good. Take profit 1-to-1, or you can go even till the next level of resistance. But if you enter in a less aggressive way, that will be an entry right here, but that would be a risky stop loss, but still fine. You can keep your stop loss 1-to-1 like this. So that is how I would enter head and shoulder pattern in two methods. Now at this point, what to expect from it? So now as we are broken above these highs and as we are now broken above this termination box, so there are two ways we can enter the trade. Number one, the target has been hit and that has been triggered. Number two, if you're not an aggressive trader, now that is a risky entry and risk to reward ratio will hinder. Now if you are someone who have entered here, you could have also managed your trades till here. That's totally up to you. But if you're someone who was looking for the extra confirmation or a breakout, we had a breakout and that is an entry. Now, as price has pushed lower, for me, that would be an entry right here. And I will keep my stop loss below. The EMAs take profit 1-to-1 initially. But this is something we call an aggressive entry for head and shoulder pattern. So every single targets and every single condition has been met, and that also hit our target. So we should be out of the trades at this point now, as now we are approaching a previous high from where we are now looking for a possible double top pattern. So we are now in the zone which is 2.940 that goes up to 3.123. We are now in this zone. All we were looking at a double top pattern. So something from the wick to the bodies, right? Now here, once the price hit my zone, I just want to see a bearish engulfing candle. That is what I want to see. Or I want to see a pin bar or a 382 candle without a body to close above this high. So wick is allowed to go up, but the body is not allowed. So once we have these two conditions, we're going to enter our trade, setting up stops and target above the wick. If we have a wick here, we're going to set our stop loss above the wick, take profit 1-to-1 initially, and then manage to 1.4-to-1. So this is now a minor zone at where the price is currently inside of. We are just looking for entry conditions like bearish engulfers or a 382 candle. Now let's say we have no condition, as now we are broken above 50 EMA. Price push up without forming any condition, and then just give us a normal pullback, forms a bullish engulfer, something like this. We are still gonna enter our buy trades till the price come back to the recent high again, from where we're gonna look for another double top. So that is what I'll be looking at. Very simple and easy. Look first for the double top here. If there is no condition, wait for the price to pull back above 50 EMA. Look for the valid pullback entry bullish. Take a buy trade. Wait for the price to come back to this high again. If the rejection here, double top again. If not, then I want to see a break above this high to take my next buy trade. So that is what I'll be looking at very closely. I'm still looking at the level above, which is a major level, which I'm going to mark in my next video. But let's wait till the price break above this high and break above this level. So these are conditions I'll be looking at. Price pushing up, still expecting a price to push up and see some rejection, short-term bearish trades, and then we have a likely chance the price will push up from here. Here on NEMIX. Now, as I've just marked the new zones, a resistance zone which is right here, 3.089, that goes up to 3.210. Now, it is a zone from where now I'm looking at a possible double top, exactly the same I've just mentioned, something like this. And look for your conditions. Double top here or bullish engulfer above 50 EMA. So that is what I'll be looking at for my condition, not taking any buy trades until we have a pullback entry above 50 EMA or until we are broken above these high for the pullback entry bullish. So wait for the price to form a condition here, which is a double top, then a pullback, bullish engulfer. No conditions, no entry, look for a buy trade. So that's what I'll be looking at here on this chart. Now here on Owanda, where I personally trade. My double top zone, pullback entry above 50 EMA and long from here. So that is what I'll be looking at here on Owanda. Keep an eye, these are the conditions now I'll be looking at very closely. Now the zone here on Owanda, it is 2.768, that goes up to 2.858, from where now we are looking at a possible push down with condition. If we have no conditions, no entries, then buy trade above 50 EMA with a valid pullback entry. Next up, we have silver. Silver is now pushing lower with this NFP price pushed lower dramatically. Now at this point, we can still get a push lower looking at gold and silver ratio, which is right here. So price is now pushing up here on gold and silver. Push up mean a push down on gold and silver. So I'm only looking at sell trade for silver at this point. So which is what? A pullback, if we have a good pullback which is expected below 50 EMA, a bearish engulfer will be my sell entry condition. Now as now we are still in this zone which is right here. As you can see the number in blue, if the price forms a bullish engulfer here, must engulf the previous candle including the wick, that will be a signal of just a scalp. If you just want to do a scalping, if you have a bullish engulfer, I'm going to go 1 ATR from a target that can possibly go up to 20 or 50 EMA, from where we can get a possible rejection. So for the long term, you're looking at sell trades until we are not broken above 50 and 20 EMA. So bullish engulfer or double bottom can be a short term long trade. And below 50 EMA, if you have a reason to enter like a sell trade, we're going to go short. So that's what I'll be looking at here on silver. Once we are completely broken below this zone, only then we're going to start to look for the trend continuation, bearish long-term trade. Here on gold, we are now in a minor anchor level, which is right here in number in blue. Again, if you have a bullish engulfer or double bottom, we can get a possible push up, 1 ATR push up, which is $17. And below 50 EMA, if the price from a bearish engulfer, we're going to go short. So that's what I'll be looking at. We do have an anchor level that has been recently broken, which is right here. And we have a possible chance of a retest of this anchor level and then a push down. Like I've been mentioning from last couple of weeks, that I'm still looking at this level below. Eventually the price is going to hit this level, but for that we need to break below this and this level. That is why we need to see a conditions as well. So for now, just pull back entry bearish, but for the bullish trades, I want to see a bullish engulfers or double bottom just for a little scalp, short below 50 EMA if you have a bearish engulfer, and we can look for double bottoms on 1 hour time frame as well. Crude oil is now pushing lower. We have a price now hit 50%. We have a bearish engulfer. We have a bearish engulfer. So it's totally up to you if you want to enter this trade. I don't like trading crude oil much, except we are in the major zones. But that is the valid entry as well, and that is the valid bearish entry as well. Aggressive entry has been triggered out. Now we also have a chance the price will push up and hit this level, which is 77.36. That goes to 79.28, where I'm interested to sell crude oil. Once the price hit this level and forms a bearish engulfers or double top, only then I'm going to enter my sell trade. Otherwise, aggressive entry has been triggered and bearish pullback entry has been triggered as well. So keep an eye. For me, this is a zone to take my short trade if the price hit my zone above with conditions only. Otherwise, I'm just looking at this level for my next possible buy trades, not buying until we are broken above 50 and 20 EMA, 50 EMA. Lastly, we have US cocoa. So US cocoa did push up a little pullback, not much from this bearish engulfer. If you look here, price gave a little pullback from these anchor levels. So from these anchor levels, it's not really strong enough, as now price is broken above this anchor level. So now we are bullish for US cocoa, and we are only looking at the level above, which is right here, from where we can expect some nice push down. So just looking for buy trades at this point. This zone in blue is the zone. If we have a pullback to this zone, bullish candle, bullish engulfer, that will be an entry condition, and we keep on taking longs till we are in this zone for the next counter trend trade. So now we are only looking at buy trades, not a valid pullback entry, but if the price pushes up, pullback above 50 EMA, bullish engulfer, and I'm only interested in taking long trades till we are in this zone to take a counter trades. Not taking sell trades as long as we are above 50 and 20 EMA, and until we are not at this area, or until the price dramatically falls below 50 EMA. For now, just looking for buy trades for US cocoa. So that's it for commodities, guys. Hope you got a value. I know that's a really long video, and I hope you got a value out of that as well. And if you have made it to the end, then I'm sure next year you will become profitable trader as well, because I know you guys are serious if you have watched the full video, and I know that you will dedicate yourself with passion to learn trading in an efficient manner. Hope you trade green. See you guys in the next video. Have an awesome weekend. Take care.